Have you ever wondered why two traders can use the same strategy, but only one ends up making consistent profits? Is there a secret time to trade that guarantees success? Or could it be something even more powerful, something hidden in plain sight that every successful trader understands, but few talk about? In this video, we dive deep into Mark Douglas's trading philosophy, a mindset that could change the way you trade forever. Whether you're new to trading or have years of experience, this insight will challenge everything you think you know. So, are you ready to discover the best time to trade and how it's not just about the clock but your psychology? Let's begin. Mark Douglas wasn't just another trading guru, he was a pioneer in trading psychology, the mental game behind the charts. His book Trading in the Zone became a classic not because it gave you technical indicators, but because it revealed something deeper. Your mind is your most powerful trading tool or your worst enemy. In this video, we explore what Douglas meant when he talked about being in the zone and how knowing the right mental state can help you find the right time to trade, not just in the market, but in your life. So here's the big question: is there truly a best time to trade, or does success come from mastering your mindset first? You'll be surprised by what you learn today. We'll break down Mark Douglas's timeless wisdom into 30 easy-to-follow segments. Each one will help you understand the psychology of trading, how to control fear and greed, and ultimately how to time your trades for maximum success. This is not just a lesson, it's a journey that could transform your trading and your life. Why do most traders lose money even after years of practice and study? Mark Douglas believed the answer wasn't in the charts, but in the mind. Traders often jump from one strategy to another, thinking they just need the right setup or signal. But what if the real problem is emotional fear of missing out, fear of loss, or greed after a win? These emotions cloud judgment and lead to poor decisions. Douglas emphasized that unless you master your mindset, no system will save you. Traders crave certainty, but markets are unpredictable. The problem is that most people want to be right more than they want to be profitable. They treat trading like a test, where having a high win rate feels like success. But Douglas teaches that being wrong is part of the game, and accepting that truth separates winners from losers. Once you let go of the need to be right, you can trade freely and with less stress. Mark Douglas challenges traders to rethink success. Instead of focusing on individual trades, he urges them to think in probabilities over a series of trades. Imagine flipping a coin 100 times. The more you flip, the closer you get to a 50-50 its result. Trading works the same way. Your edge plays out over time. This mindset shift is crucial for long-term success and helps traders detach emotionally from each trade. One of Douglas's most famous quotes is, "The market doesn't owe you anything." This simple idea can completely transform your trading mindset. Many traders feel frustrated after losing trades and believe they deserve a win because they studied hard or followed the rules, but the market is neutral. It doesn't know you, care about you, or reward effort. Once you accept this, you stop trading with a sense of entitlement. This realization helps you become more objective. You stop trying to control the market and instead focus on what you can control: your reactions, your risk, your plan. Douglas believed that detaching your emotions from market outcomes is the first step to becoming consistent. The market is just a flow of information and price movement. Your job is to react to it with discipline, not emotion. Accepting that the market owes you nothing frees you from disappointment. You won't chase revenge trades or double down on losses trying to earn back what you lost. You trade because you have a system and you believe in the edge it gives you over time. Letting go of expectations allows you to trade in a relaxed, focused state, which Douglas called trading in the zone. At the core of Mark Douglas's teachings is the probabilistic mindset, the idea that no single trade matters. Traders who think each trade must be a winner set themselves up for emotional swings and poor decisions. Douglas emphasized that trading is a numbers game. And your job is to take trades that have a positive edge over and over again. This mindset helps remove fear and builds confidence when you trade with probabilities in mind. You stop judging yourself on each outcome. One losing trade doesn't mean you failed. Just like one winning trade doesn't make you a genius. Instead, focus on your process. Did you follow your plan, manage your risk, and stay disciplined? If the answer is yes, then you're succeeding, even if the trade lost money. Over time, your edge will play out. Mark Douglas used the example of a casino. Casinos don't care about individual bets. They make money because they know the odds. Each game has a built-in edge, and over thousands of bets, they always come out ahead. As a trader, you are the casino, not the gambler. Think long-term, stick to your edge, and let the law of large numbers work for you. Many traders believe they can control the market or at least predict it accurately most of the time. But Mark Douglas shattered this illusion. He taught that the market is random in the short term, driven by millions of participants acting on countless variables. Trying to predict every move is not only exhausting but impossible. Instead, focus on controlling yourself. The only things you can control in trading are your risk, your strategy, and your emotions. Accepting this truth is liberating. You don't have to know what the market will do next. You just need to know what you will do in response. Douglas taught that traders who focus on their behavior instead of the market's behavior find more peace and better results. Letting go of control doesn't mean giving up, it means trusting your process. You set up trades with positive expectancy, manage your risk, and follow your plan. If the market gives you a win, great. If not, you move on to the next opportunity. This mindset keeps you grounded and helps you trade calmly and confidently, no matter what the market does. Fear is one of the biggest obstacles traders face. Fear of losing, fear of missing out, fear of being wrong. Mark Douglas identified fear as a subconscious response that can sabotage even the best trading plans. When fear takes over, traders hesitate, exit trades too early, or avoid taking trades at all. Fear creates inconsistency, and inconsistency kills profits. Douglas believed that fear comes from a lack of trust in the market and in yourself. If you don't trust your strategy or your ability to handle losses, fear will dominate your decisions. The key is building confidence through repetition. Take small, controlled risks, follow your plan, and prove to yourself that you can survive losses. Confidence grows from experience. You can't eliminate fear, but you can manage it. Recognize when it shows up, pause, and ask yourself, am I following my rules or reacting emotionally? This awareness helps you regain control. Over time, you'll learn to trade through fear, not around it. Douglas taught that courageous, disciplined trading comes from trusting your edge and your process. Most traders begin their journey trying to predict the market. They believe if they can just find the perfect indicator, the perfect signal, they'll win every time. But here's the truth Mark Douglas emphasizes: you can never truly predict what the market will do next. The market is made up of endless variables, news, emotions, and global events, all of which are out of your control. Chasing certainty is a trap, and it leads to frustration, overtrading, and losses. So instead of trying to predict the future, what if you learn to work with probability? Douglas explains that trading is a probability game, not a prediction game. Every trade is just one outcome in a series of outcomes. The key is not to focus on being right, but on making decisions based on a proven edge and executing consistently. This means accepting losses as part of the game and removing the emotional weight of each trade. When you stop chasing perfection, you start trading with clarity, and this clarity can help you identify when it's truly the best time to trade. Imagine how freeing it would be to stop needing to be right every time. Mark Douglas encourages traders to think in terms of odds, just like a casino does. A casino knows it won't win every hand, but over time, with discipline, it will profit. Can you approach your trading the same way? Can you stop fighting the market and instead trust your edge and your plan? That's when you'll realize the best time to trade isn't about external events, it's about your internal readiness. Have you ever hesitated to take a trade even when your strategy gave you the perfect signal? Or worse, exited too early because fear took over? Mark Douglas calls fear the silent killer of trades. It clouds your judgment, causes you to doubt your plan, and makes you react emotionally. Fear can make you miss great opportunities or take impulsive actions that lead to losses. But what causes fear in trading? Often, it's the belief that every trade has to be a winner and that losing means failure. The truth, Douglas reveals, is that fear comes from our beliefs, not the market. The market is neutral, it doesn't care about your emotions. But your mind assigns meaning to every tick on the chart. To overcome fear, you need to shift your mindset. Instead of thinking, "What if I lose?" ask yourself, "What's my risk and is it manageable?" Accepting risk and embracing the idea that losing is part of trading is the first step to controlling fear. This mental shift leads to better timing and better results. When you manage fear, you become more patient, and patience is key to finding the best trades. You wait for your setup, follow your plan, and don't jump in or out because of anxiety. This mental calmness helps you recognize the best times to trade, not because of external signals, but because you're finally aligned internally. You're not rushing. You're not afraid, you're focused. That's the mental zone Douglas wants traders to reach. Just as fear can ruin your trades, so can greed, the urge to make more, stay in longer, or risk bigger. Mark Douglas warns that greed can blind you to danger and make you abandon your plan. You might hold on to a trade far beyond your target, thinking, "I can squeeze a little more out of this." But greed leads to poor risk management and impulsive decisions. Greed isn't about how much you want to make, it's about the emotions that come when profits cloud your judgment. Douglas teaches that discipline kills greed. The best traders know in advance when they'll enter and exit a trade. They don't let emotions decide, they let the plan guide them. Greed often appears after a winning streak, giving traders a false sense of invincibility. Suddenly, they take bigger risks or overtrade. The solution: stay consistent, stick to your trading size, your rules, and your targets. That's how you avoid greed's trap. When you control greed, you trade with clarity and patience, which leads to better timing. You don't rush into trades just to make quick money, and you don't overstay your welcome. You wait for quality setups and take profit when the plan says so. Douglas reminds us that the goal is consistency, not hitting home runs. The best time to trade isn't when you're chasing money, it's when you're calm, focused, and following your edge. Have you ever changed your trading decision mid-trade? Maybe you moved a stop loss, took profit early, or entered impulsively. This is where rules save you. Mark Douglas was a strong believer in predefined rules. He said, "When you have rules, you remove the emotional guesswork. Trading without rules is like driving blindfolded. Eventually, you crash." Rules create structure, discipline, and most importantly, consistency. Douglas teaches that rules are not restrictions, they are your freedom from emotional chaos. Rules help you stay grounded when emotions rise. Your rules might include entry, exit criteria, risk per trade, max trades per day, and more. Following them keeps you objective and helps you avoid emotional mistakes. Most importantly, rules help you develop a rhythm. And rhythm is key to identifying when it's the best time to trade. When your trading is based on rules, you gain confidence. You know what to do and when, and you stop second guessing. This leads to faster decision making and better timing. Douglas emphasizes that your edge works only when it's applied consistently. And that's only possible with strong rules. The best time to trade becomes clear when your system and rules align with market conditions and your emotions. Stay out of the way. Many traders confuse confidence with luck. After a few wins, they feel on top of the world, but when losses come, their confidence crumbles. Mark Douglas explains that true confidence comes from discipline, not results. You can't control outcomes, but you can control your behavior. Discipline means doing the right thing according to your plan no matter how you feel. Over time, this builds real, unshakable confidence. Douglas believed that confidence through discipline helps you take trades without hesitation or fear. You trust yourself to follow the plan, manage risk, and accept the outcome. This reduces stress and helps you stay focused. When you're disciplined, you don't need to hope a trade works. You know your edge and your role in executing it. This mental clarity leads to better timing and consistent performance. With confidence, you can wait for the best opportunities. You're not chasing trades or acting impulsively. You're patient, and when your setup appears, you act decisively. Mark Douglas says trading confidence isn't about bravado, it's about calm certainty in your process. That's when you truly know the best time to trade, when your mind is clear, your plan is ready, and you're in control. One of Mark Douglas's core lessons is this: you must fully accept the risk of every trade. Most traders think they do, but deep down, they're hoping to avoid loss. This hope leads to denial, hesitation, and emotional trading. Douglas explains that when you accept risk, you remove the fear. You understand that losses are part of the business, and not a personal failure. Accepting risk means knowing how much you're willing to lose before you take a trade. You set your stop loss, manage your position size, and prepare mentally. There's no fear because you've planned for it. This creates emotional freedom. You're not shocked or angry when a trade loses. It was part of the game plan, and this freedom helps you stay focused and ready for the next trade. When you truly accept risk, you become more selective and patient. You don't force trades, and you don't avoid them out of fear. You wait for quality setups and trade them without hesitation. Mark Douglas says that's when you become a professional trader, someone who treats trading as a business, not a gamble. And that's when you find the real best times to trade, when everything aligns and you are ready. Mentally and emotionally, patience is one of the hardest skills in trading, but also one of the most powerful. Mark Douglas emphasized that waiting for the right setup is what separates successful traders from impulsive ones. Many traders feel pressure to be constantly active, fearing they'll miss out. But Douglas teaches that overtrading leads to poor decisions, unnecessary risk, and emotional exhaustion. True patience means knowing when not to trade. It's understanding that not every market condition is favorable, and that sitting on your hands is sometimes the best action. Douglas encourages traders to focus on quality over quantity. Take fewer trades, but make sure they align perfectly with your plan and your edge. This controlled approach leads to more consistent results and reduces stress. When you develop patience, you're in control. You're not reacting emotionally, you're acting strategically. Patience helps you identify the best time to trade because you're not rushing. You wait for the market to come to you, and when it does, you're ready. Douglas reminds us that profit is in the waiting, not in constant activity. Mark Douglas believed that self-reflection is key to improving as a trader, and journaling is the best tool for that. By writing down your trades, thoughts, and emotions, you gain insight into your habits. You begin to see patterns, what you're doing well, and where you're slipping. A trading journal isn't just about tracking results, it's about understanding yourself. A good journal includes more than entry and exit points. Write about why you took the trade, what you were feeling, and whether you followed your rules. Over time, this builds self-awareness, which leads to better decisions. Douglas teaches that your biggest growth comes from within, and journaling makes that growth visible and actionable. Reviewing your journal regularly helps you stay disciplined and focused. You spot emotional triggers, refine your strategy, and build confidence. Douglas saw journaling as a mirror reflecting your strengths and weaknesses. With this tool, you'll become more in tune with your trading and better at identifying when it's truly the best time to trade. Many traders waste years searching for the holy grail strategy, a method that never loses. Mark Douglas called this a dangerous illusion. No system, no indicator, no guru can guarantee success. The market is dynamic, and losses are inevitable. Believing in a perfect system leads to disappointment and constant strategy hopping. Douglas taught that you don't need a perfect system, you need one with an edge that you can apply consistently. Most profitable traders win only slightly more than they lose, but they manage risk and stay disciplined. The real holy grail is mastering yourself, not the market. It's about developing a mindset that can handle uncertainty. Let go of the search for perfection and focus on execution, risk management, and mindset. That's where long-term success is found. Douglas reminds us that trading isn't about finding a magical indicator, it's about becoming a skilled decision maker. When you focus on yourself, you begin to see the best times to trade with clarity and confidence. One of Mark Douglas's most powerful lessons is this: let go of the outcome. Most traders obsess over whether a trade will win or lose. This attachment creates stress and leads to emotional decisions. Douglas teaches that success doesn't come from predicting outcomes, but from following a consistent process. You can't control the market, but you can control your actions. When you let go of the outcome, you trade for emotional freedom. You're no longer afraid of losing or overly excited to win. You simply take trades that meet your criteria and accept the results. This mindset reduces fear, builds confidence, and leads to more consistent execution. Douglas calls this trading in the zone, focused, present, and free from emotional baggage. Letting go allows you to see the best times to trade more clearly. You're not chasing trades or avoiding them, you're calmly waiting for the right setup. When outcome no longer controls you, your process improves, and so do your results. Douglas reminds us that real power comes from within, and letting go is the key to mastering the market and yourself. Overtrading is one of the biggest mistakes traders make. Mark Douglas explains that overtrading comes from emotional need, not logic. Maybe you want to recover a loss quickly, or feel excited after a win. Either way, overtrading often leads to poor setups, bigger losses, and emotional burnout. It's driven by impatience, not discipline. Douglas teaches that quality beats quantity. You don't need to trade all day to be profitable, you just need a few good trades. Stick to your strategy and take only high probability setups. Avoid the temptation to be in the market all the time. The best traders wait for the market to come to them. They don't force trades. They let trades come naturally. By avoiding overtrading, you conserve mental energy and protect your capital. This leads to more focus and better timing. You see setups more clearly and act with confidence. Douglas reminds us that less is more in trading. Fewer, better trades lead to more consistent results and help you spot the best times to trade with precision. No one likes losing, but in trading, losses are unavoidable. Mark Douglas teaches that resisting losses creates emotional turmoil. Many traders take losses personally, as if it means they failed. But Douglas reminds us that a loss is just one trade in a series. It doesn't define you, and it doesn't destroy your edge. Accepting losses reduces fear and helps you trade with clarity. You don't panic or chase revenge trades. You simply follow your plan and move on. Douglas encourages traders to detach their identity from outcomes. You're not your last trade, you're the habits you build and the discipline you follow. When you embrace losses, you become a stronger trader. You're no longer afraid. And this helps you identify better trading opportunities. You wait for the right setups and execute with confidence. Douglas teaches that accepting losses is freedom, and this freedom leads to better timing and consistent success. Confidence is essential in trading, but Mark Douglas warns against false confidence, the kind built on recent wins. True confidence comes from knowing you can handle any outcome because you follow your plan. It's about trust in your process, your risk management, and your discipline. Douglas encourages traders to build confidence through experience and repetition. Take small, manageable risks, and prove to yourself that you can follow your rules. Over time, this builds real confidence, not from outcomes, but from consistency. You become less emotional, more focused, and more in control. With confidence, your timing improves. You stop hesitating, stop second-guessing, and act decisively. Douglas teaches that confident traders find the best times to trade because they're focused, prepared, and mentally sharp. Confidence isn't about ego, it's about calm, steady execution. Attachment is dangerous in trading. Mark Douglas teaches that the more attached you are to an outcome, the harder it is to trade well. Attachment creates fear, hesitation, and emotional decision-making. Detachment, on the other hand, creates freedom. You're not obsessed with the result, you're focused on the process. Detachment allows you to trade without stress or pressure. You take trades that meet your criteria and accept whatever happens. You don't force trades or avoid them, you trade what the market offers. Douglas emphasizes that detachment doesn't mean you don't care. It means you care about following your process, not about any one trade. With detachment, your decision-making improves. You see the market clearly and act objectively. This leads to better timing and better results. Douglas teaches that detachment is emotional strength and it helps you find the best time to trade with clarity and confidence. Every trader faces challenges, losing streaks, market volatility, self-doubt. Mark Douglas teaches that consistency through challenges is the mark of a professional trader. You don't abandon your plan in tough times, you adapt, stay disciplined, and keep showing up. Douglas emphasizes the importance of trusting your process during rough patches. It's easy to get emotional and change strategies, but that leads to more confusion. Stick to your edge, manage your risk, and stay focused. Challenges are temporary, but your habits determine your long-term success. When you stay consistent through challenges, you build mental toughness. You become more patient, more confident, and more prepared. Douglas reminds us that consistency is power and it helps you spot the best trades. Even in difficult markets, unrealistic expectations cause stress and disappointment. Mark Douglas teaches that many traders expect fast profits and perfect trades. But this mindset is dangerous. The market doesn't owe you anything, and success takes time. Managing expectations helps you stay grounded. Douglas encourages traders to focus on long-term growth, not short-term gains. Accept that losses happen, wins take time, and consistency matters most. Lower your expectations for instant success and raise your commitment to discipline and learning. When your expectations are realistic, your emotions stabilize. You trade with patience, clarity, and confidence. Douglas teaches that managing expectations helps you see the best times to trade more clearly. Because you're not chasing, hoping, or fearing, you're simply executing. Trading is 80% mental. Mark Douglas believed that your psychology shapes your results more than any strategy. The charts don't change, but your mind does. Emotions, beliefs, and thoughts all affect your actions. Master the mental game, and your trading transforms. Douglas teaches that self-awareness is key. Know your triggers, fears, and habits. Develop discipline, patience, and confidence through mental training. Trading isn't just analysis, it's emotional control. The more you understand yourself, the better you trade. When your mind is clear, your timing improves. You see opportunities and act without hesitation. Douglas reminds us that the best time to trade isn't about the markets, it's about your mindset. Master your mind and the market becomes easier to navigate. It may sound strange, but Mark Douglas teaches that discipline brings freedom. When you follow rules, manage risk, and control emotions, you're free to trade without fear. You stop reacting, you start executing. Discipline isn't restriction, it's empowerment. Douglas believed that freedom in trading comes from knowing you're in control. You don't rely on luck or guesswork, you rely on your process. This creates consistency and reduces stress. Discipline gives you the space to think clearly and act wisely. With discipline, You trade only when conditions are right. You avoid bad setups and wait for high-probability trades. This leads to better timing and better outcomes. Douglas teaches that freedom through discipline is the path to mastery and the key to finding the best trades. Mark Douglas leaves us with a powerful message. Trading is a journey of self-mastery. It's not just about charts and money, it's about understanding yourself. Every trade is a chance to grow, to become more disciplined, confident, and free. Trading can change your life, but only if you're willing to change your mindset. Douglas's wisdom teaches us that success isn't about finding the best time to trade. It's about becoming the best version of yourself as a trader. With the right mindset, process, and emotional control, you can thrive in any market. The lessons go beyond trading, they shape how you think, act, and live. So take these lessons to heart, practice them daily. Build discipline, accept risk, and trust your edge. The market rewards those who master themselves. As Mark Douglas said, when you're in the zone, trading becomes effortless. That's where the magic happens and where you find your best trades.